Well, it is now 8:35. It's time to bring in Nic Chahine. He's our options expert. He joins the show every Tuesday to discuss
Good
this
morning.
week's. Good morning, Nick. How you doing? Enough
Good.
volatility for you?
It's perfect volatility for me.
Yeah, you like it? You like CMG down here at 522.65?
Well, I was listening to what you were saying, both of you. Everybody has a point, but I think the best point is there are too many unknowns. I think Dennis said it, and I said it several times this week. Yesterday's bounce was really surprising. I mean, I think it was down below 500 in pre-open yesterday morning, and shook it off and closed better than Netflix. So that was pretty impressive. However, today, I mean, last night after the market closed, it immediately went back to the low 500s. Technically, I called this low before the E. coli outbreak, and I posted it with a chart, and I said if it loses that level, it's going to head to the low 500s. And it got here through a headline, but now that it's here, I don't want to catch the knife because there's just too many unknowns. It is a $500 stock still. There's a lot
Multiples
of
high
ways to
too
go.
still.
Yeah.
Like when you're talking 27 times earnings and you have,
Yeah.
people backing off from eating there, that's my concern here. But, like we said, people are looking to pick bottoms and this was still a darling. I think still people believe in the brand, even though it's in the short term getting tarnished here. So I don't know. What do you think like 3, 4 years out? Because that's what Chris Tex was saying. Look 3 years out. Is this a buying opportunity for Chipotle here? Because they're
Let,
going to get this problem fixed.
the the problem with the Chipotle right now, the challenge for the stock price, not the company. Obviously, they have decent management for turning comps that were incredible. Having done some work in the restaurant industry as far as analysis, there is the comp is really challenging, and they were turning some amazing numbers for a long time. But the premise was based on whatever the tagline was: good food or food with a conscience, whatever it was, and tooted by a lot of experts, most notably probably Kramer. And if you base your selling strategy that, hey, eat our food, don't eat the other junk, and then your food causes your comp to go down the toilet, then you lost both assets at the same time, and one is hurting the other. So they have to emphatically know where it's coming from. I mean, Costco had an E. coli scare at about the same time, just after Chipotle did, and it was gone off the headlines in hours because they identified it and they said, okay, this is what it was. Let's just move on. Here, we have no clue. And so far, they're lucky that nobody's died yet. What
Yeah,
if?
like that's a
Hopefully,
concern.
nothing happens like that. But E. coli is serious business. What if somebody actually, gets seriously ill?
Yeah.
That'll be a different story. So I can't, if calls, yes, cheap calls. If you want to throw a few $100 on some calls, like somebody who did it yesterday early in the day, got rewarded handsomely by the end of the day. So maybe yes, but fundamentally, I cannot catch this falling knife right here.
What else are you looking at here on your radar? Let's go to Twitter. I just want to ask you about Twitter first because we've been talking about it on the show. It finally took out that $25 level here. It's trading down again in the pre-market here. Is this one that interests you? Because that 25 was a big level that's finally breached.
Well, Twitter, it's still the same story to me. I have no faith in the management, what they're doing. Either they're doing it and not telling us, and they're going to come out with something fantastic. But what they're showing us, they're almost like dislike the stockholders, and they'll do anything they can to, depreciate the stock price. There are a lot of ways you can talk up a company, and they're not doing any of it. They seem like combative every time they come on. Maybe it's just, I'm still picturing the old CEO in my head, but technically, it's not good that you rally rally quote in September, and then you rally bigger in middle of October, and then you rally here and you get nowhere, and now you're bumping back on some sort of a neckline around where it is right now yesterday. So if it loses this area, it could drop lower, technically speaking. Maybe it's not perfect technical head and shoulders, but the price action is of it. You rally, then you rally further, and then you rally the third time, you fail worse than the other two times, and you come back about the same neckline. So the bulls may be tired, or the people trying to buy it. So technically, it doesn't look good. But like you and I have said, the asset is still good. the management has to prove itself. They don't know how to make money, or I don't know what's going on. But the asset itself is still very user friendly, regardless of what they say in the news. It's so easy. I had a debate the other day with a friend of mine who's never used Twitter, and I showed him on my phone how I use it. He goes, "Oh my gosh, I got to get on this thing." And he left the party and came back and said, "I'm on." So it's easy if somebody wants to use it, but they don't. When they first came out, they released a video. Here's what Twitter is. Here's how you use it. But that's all gone. So the asset's still good. The price, eh. So you got to buy it and plug your nose, buy it long term if you want. But the price action is not inviting.
The other big story of the day is obviously oil. Oil got murdered yesterday. We're seeing follow through here again this morning. Everybody who's picking bottoms at 40 is now in trouble. And now we're looking at this thing as it's breaching $37 here this morning. Oil in a world of hurt. Are you looking at this as an opportunity here? Or are you just looking at this as I'm hands off?
I'm hands off just because oil is a rigged game 100%. It is controlled, the price is controlled completely, and I mean completely. Fundamentals matter nothing at this point by Saudi Arabia and what they want to do with this price war that's going on. It's an economic war over oil. They want market share. They're killing everybody else as far as price is concerned, and they're winning. And we keep saying they don't matter. And it's like, what are you talking about? Look at the scoreboard. Everybody's broke here. They're the only ones making money. Their society is broke because they're making less money overall, but their industries are booming because of market share. They're winning the fight. They're accomplishing what they want to do. And yet we keep talking about fundamentally trading oil. How could you? I mean, everybody asks me at least once or twice a week. I get asked several times, actually, a week about, is it time to go long Exxon or Chevron? They're good prices, good companies. I agree, I agree, I agree. But a day like yesterday, I said, if oil gets hammered on a headline, guess what? Chevron and Exxon are going down too, regardless of how good and how cheap they are. They could get cheaper. So it is a rigged game. I can't play it from a fundamental standpoint, and all of my heavy money trade, my serious money trades are all set on fundamentals. The rest are lottery tickets. So if you want lottery tickets, maybe, but technically it showed us it could get here if it lost a few levels, and it lost those levels, and here we are, mid 30s. It could go lower, sure. It could go higher, sure. 6, 10% a day, it's done it, but on headlines and fake.
We're on the line with Nic Chahine. He's an option expert. He joins the show every Tuesday discussing this week's options outlook. Nick, let's go back a little bit. Let's just talk Mr. Market here. Really polar opposite days on Thursday and Friday. Monday we gave it back in a world of hurt. Today has your fundamental outlook changed on the market, and what are the prospects now for a Santa Claus rally?
Okay, there's a lot to be said here. We can have a whole show about it, but I'll try to be brief. Nothing has changed for me. The fundamentals remain the same, meaning the US is doing okay. The recovery is not as fast as we wanted, but it's here. We're almost at full employment. Rates are going to continue rising from here sooner rather than later. Maybe 2, 3 times next year. My guess is December, and that was my guess from earlier in the year. And maybe in the late first quarter, I'm saying maybe April, and then late in maybe another one sometime in the fall. So this has been always the thesis for me for the last 2 years almost. And also part of the thesis is that China is still a big mystery. Japan is mired wherever it is in deflation. Eurozone is still behind us a couple of years, and they're trying to do what we did a couple of years ago. So this whole thing hasn't changed. What changed is sentiment and how people are reacting to it. Dennis said something earlier today, it's priced in. I challenge that statement. Nothing is ever priced in. Yes, we priced in some moves. We've popped this way, we've sold this way. But on the headline, markets will move. I guarantee you that. So nothing is priced in. If they raise rates in December next week, um, I think markets will get scared. These sell offs the last few days had nothing to do with the rate hike. If they did, rates would have gone up. Yet we had bonds rally. So this
If
doesn't make sense.
Okay, if it's not priced in, and I'm just going with you here because you could very well be right. Should we be looking at the financials then? Because obviously that's the direct beneficiary to rising interest rates, and those financials are pulling back here again this morning.
Are you reading my notes? No, I would not
Why?
chase. I would not chase the
Are we
financials.
chasing here though? Really? Like look at J.P. Morgan for instance.
Right.
That thing's been
Look at
consolidating here for a month and a
185 here in
half.
Goldman
Right.
Sachs. Holy
Last
Toledo.
time the
Oh,
financials perked up on the headline when we were assured that there's going to be a rate hike a few weeks ago,
Yeah.
I think I came on your show and I said don't change the XLF. It has a lot of had resistance at 24 and a half. I think it was at the time when we
Yeah.
talked. Well, guess what? This week resistance at 24 and a half still existed. Yesterday I checked. I didn't check this morning, but and next week into 25 also I wouldn't chase it past that. If the financials rally pop on a rate hike and markets fall, I will short the financials because they will immediately turn around and they should revert to trading with the markets in general. Financials, the headline is, yeah, rates are going up, they'll make more money, but it's not that simple. I think they need certain things to happen, spreads to widen for them to make money. So it's not as simple as, the overnight rate went up, therefore financials going to start swimming in money. So I will challenge that pop. And I think the last two sell-offs in the last couple of days have had nothing to do with actual fear of rate hike. I think the markets still have blinders on. People say, "Oh, they're okay with it." I'm not so sure. So, what I do is, since I'm not sure, I look at the ranges and I build in buffers for both moves. A move up as a relief rally that, yeah, the headline is behind us, and a move down. So, and if I can withstand either way, then I'm okay to trade another day.
I
moving
mean,
on.
they're really in a trading range here too. SF Bright just talking about Bank America here, so I guess I continue to trade the range. Like I'm just looking at the chart of that one. Every time it gets down to 17, finds buyers. Every time it gets up to around 18, seems to find sellers. So I guess while these things remain range bound, you can continue to trade the range.
Yes, and there is no reason for me from the open interest, and that's really what drives my
Just to see
price
that, right?
expectation to chase them higher. So
Right.
if they rally, big, a huge pop on the headline, I will tend to maybe
Fade
buy
it.
a few puts. I'm not going to go
Gotcha.
with selling them outright. You know how I short very cautiously when I short, and nowhere near these guys that are on TV saying I've been short, Chipotle since it was $10 or whatever. So it's just investing a few bucks. I'd rather profit from people making money. So if I can profit on the bull side, I will do it. But since we're at all-time highs, coming up against headwinds, it's the easier trade for me is to cautiously short. Cautiously short meaning buying puts or selling credit call spreads way out in time, way higher than current prices. And these are the easiest way. And doing both, you can go short for free. The only cost is the actual potential of losses down the line.
Okay, all right. We are on the line with Nic Chahine. He's giving us his options outlook here. Let's go to the old standby price line.
Okay, stand by on Priceline. I have not traded it, disclosure, because I've been waiting for the ranges I talked to you about, and it touched on the bottom end of it a few days ago, and then it rallied higher. So recently, it's had good price action. I had a conversation 2 days ago with a couple of members, and I said 1375 could be where it's headed if it continues with this run, and that was when it was in the 12s still. So it's almost there. It just needs a couple of good days. I don't know what it's going to do today. But again, this guy, I would only trade it when I have extreme levels. So if it comes back and it breaks apart down to the 1100, then I'll look to go long it. If it continues to 1375, maybe I'll throw a few sold calls way out in time. Because it's so high priced, it offers such high premiums and it's volatile. The best way to trade it is out in time, buying and selling, selling calls and puts out in time very cautiously,
Right.
and expecting that yes, I can book a loss if I need to.
All right, let's just before we let you go, take a look at Fang here. Just get your opinion on these four. I got a setup in Amazon I want to talk to you about. Facebook made its all-time high there, 110.65. It's really found a range here between 105 and 107 and a half. Here, closer to 108. Is this a little bit of too much consolidation for you after this big move up here? Maybe Facebook about to crack?
Oh, for Facebook, I was looking at Amazon. Amazon looks like a rising wedge about to break down there.
I know.
Let's relax.
Dick, I'm loving this one. I was talking about it with Dennis yesterday, and they didn't get me hook, line, and sinker when they went through that 661 area. I look at those trio of lows there. Actually, got 4 or 5 there. I mean, 660. How would you play this one, Nick? Here, would you like to do a, maybe a 630, 640 put spread, something along those lines? How would you play it?
Okay, I switched to Facebook. I'll answer both real quick. Facebook, I wouldn't chase it past 106 and a half this week, 107 as far as there's a resistance there.
Uh-huh.
So if it rallies, and it should have support strongest around 102, 101-ish. That's this week only. Okay, Amazon, switching back to as far as how would I play it?
Yeah.
The easy, if you're expecting a drop down and you want to double your money, the easiest way to play it, the potential double your money, is to buy close to the money debit put spread with time on the clock. If you buy it this week, you risk losing all your premium. If you buy it next week, you have a better chance of just having a couple of days to change your mind and sell it for about even or so. So then, if you pay 40 cents on a dollar wide spread close to the money, then if indeed the break downwards happen, you stand to double your money if you're correct. I did it with Netflix this week, and I closed it yesterday. I posted it on Twitter a couple of days ago. I said, sacrilege, I'm shorting Netflix. And yesterday it paid me for it.
Yeah.
That's what I did. I bought close to the line, 127, 126 debit put spread, and once it broke 5%, boom, you sell out.
Do you put those orders in as an actual spread? You kind of leg into them. How do you do it on your platform?
I almost never leg into a spread. I tried. You can make a lot of money doing it, but every once in a while something goes wrong and just a headache. I just put it as a spread. I ask for the premium I want, and I wait for it to happen. If it doesn't happen, then I may or may not let go a few pennies here and there. It depends on how badly I want the spread.
Okay. All right. We've been on the line with Nic Chahine. He's an options expert. He joins us every Tuesday to discuss this week's options outlook. Also, you can check out his product on Marketfy. He's a Marketfy Maven, the author of Create Income with Option Spreads. Great having you on, Nick. We'll talk to you again next Tuesday.
I always wish I had more time with you guys. Talk to you
All
later.
right.
Thanks, Nick.